All right, let's get right into it. In early 2026, one asset has been absolutely dominating the headlines, shattering records and making pretty much everyone ask the same question. What on earth is going on with gold? Today, we're going to dive deep into this crazy surge in the price of gold to figure out the powerful forces behind this historic rally.
67%. Just let that number sink in for a second. That was gold's insane return in 2025 alone. To give you some context, that was its best year since all the way back in 1979. So yeah, this wasn't just a good year, it was a history-making one, and it set the stage for a truly explosive start to 2026.
And that brings us to this number, $4,716. That was the price for a single ounce of gold on January 20th, 2026, a new all-time high. You know, a number like that isn't just a market tick, it's a huge signal. So let's decode exactly what that signal is telling us.
Okay, so here's our game plan. We'll start with the rally itself, how we got here. Then we'll unpack the geopolitical spark that really lit the fuse. After that, we'll look at the deeper structural fuel keeping this fire going, check out where the experts think we're headed, and finally, we'll talk about what gold's price really tells us about the state of the world.
First up, the rally itself. And you can see from the title, analysts are kind of fighting over what to call this. Is it a real breakout or is it a blow-off top? Which is just fancy talk for a super steep price jump right before a possible crash. But what no one is arguing about is the incredible speed of this climb. It has been relentless.
Let's just walk through the timeline, because it really shows how fast things escalated. In October of 2025, gold smashed through the $4,000 mark for the first time ever. That's a huge psychological level. By December, it locked in that massive 67% gain for the year. And then, just a few weeks into 2026, boom, it blasted through to another record. The momentum here is just, wow.
So a rally this big doesn't just happen. It needs a catalyst. And while there are a lot of things going on, the immediate trigger for this latest surge really boils down to geopolitics. This was the spark that lit the whole fire.
So the main story here is what people are calling the Greenland saga. Basically, tensions just exploded between the United States and some of its key European allies over strategic control of Greenland. And this wasn't just some diplomatic argument. It came with very real threats of massive new tariffs. We're talking a potential 200% tax on some famous European goods. And if there's one thing markets absolutely hate, it's that kind of uncertainty.
And you can see the reaction right here. This quote just nails it. A sell America rotation. That means big money investors started yanking their cash out of U.S. assets because they were worried about a trade war. This hammered the U.S. dollar, and when the dollar goes down, gold, which is priced in dollars, almost always goes up. It's the classic flight to safety.
But here's the thing. The Greenland issue didn't just happen in a bubble. It was piled on top of a world that was already pretty nervous. You had the ongoing conflict in Ukraine, instability in the Middle East, plus worries inside the U.S. about its own central bank and the constant threat of government shutdowns. It all added up to a perfect storm of anxiety, pushing people toward the one thing they see as safe: gold.
Okay, so if geopolitics was the spark, you need fuel to keep a fire burning this hot. So now let's look at the deeper structural forces that are propping up these record prices. These are the big long-term trends that were already in motion way before this latest crisis.
And honestly, this chart might be the single most important piece of the entire puzzle. Just look at the shift in buying from the world central banks. Before 2022, they were buying, around 450 tons a year. But from 2023 to 2025, that number more than doubled to over 1,000 tons a year. This isn't a small change. It's a massive, fundamental shift in strategy from the biggest players in the game.
So the obvious question is, why are they buying so much? And it really comes down to this one key idea: de-dollarization. In a world with so much political tension, a lot of countries are getting nervous about being so dependent on the US dollar. So what's the alternative? Gold. It's the ultimate neutral asset that no single country can print or control. On top of the central banks, you've got two other huge factors pushing prices up. First, a weaker US dollar makes gold cheaper for anyone holding other currencies, which naturally boosts demand. And second, everyone is expecting the US Federal Reserve to start cutting interest rates. When rates go down, holding something like gold, which doesn't pay any interest, starts to look a whole lot better compared to holding government bonds.
So all of this leads to the big question on everyone's mind. After a run like this, where in the world can gold go from here?
Let's turn to the experts and look at a few possible scenarios for the rest of 2026.
And listen, the major institutions are taking this very seriously. You've got JP Morgan's head of global commodities strategy right here saying her team expects prices to push towards $5,000 an ounce by the end of the year. When a huge bank like that makes a call, it shows you they have some serious conviction in these trends.
Now, this table gives us a really fantastic, balanced look at what could happen. The base case, which they give a 50% chance, sees gold kind of hanging out in the low 4,000s. The bear case, at a 20% chance, would need the dollar to suddenly get stronger and the economy to really take off. But then look at the bull case, with a 30% probability. This is what some are calling a doom loop, where a recession creates more government debt, which weakens the currency and creates more fear. In that world, gold could easily blow past 4,500 on its way to 5,000 or even higher. Okay, so let's zoom out. We've talked about the what's, the why, and the what's next. But for this last part, I kind of want to reframe the whole conversation. Because the price of gold isn't just a number on a screen. It's a message. And this right here, this gets to the absolute heart of it. The record price we're seeing isn't just about traders making bets. It's a real-time indicator of global anxiety. It's reflecting some really deep worries about stability, about government debt, and about the long-term trust in our entire financial system. When that trust starts to wobble, people run to the one asset that's been a store value for thousands of years. So I'll just leave you with this one last thought. As we watch the price of gold keep grabbing headlines, maybe the most important question isn't how high is it going to go, but rather, what is this price really telling us about the health of our world? Thanks for tuning in.